Well, welcome. Happy Thursday, everyone. Joining us for this Reuters sponsored webinar on appetite versus expectation, building up to Connected Underwriting USA, which will be hosted in Austin, Texas, September 29th to the 30th. I'm your host and moderator today, Lisa Wardlaw. Could not be more excited than to be joined by all these fabulous panelists coming from, all over. I'm going to let them introduce themselves. Stephanie, Linton, Gunter, and Tom, thank you so much for joining us today. Just before you start your introductions, for everyone coming in to the webinar, I just want to make sure that you're signing in and getting comfortable. You are on the Appetite versus Expectation Reuters webinar, and we are going to have a Q&A functionality, which as we go through the webinar and you find something interesting or your curiosity is piqued or you want to know more from our panelists, once we go through the kind of key themes, we're going to take a Q&A session. So feel free to drop your questions in as they pop up. If you're anything like me, you forget what, like I hear something, I'm like, oh, I forgot about that. So go ahead and drop your question in real time, and I will make sure that I organize them and then serve them up to our panelists during the Q&A section of the webinar. So Stephanie, I'm going to turn to you first. If you don't mind giving us a little bit of your background and intro, because today we're going to get really deep in the delicate balancing act between brokers and carriers, between appetite, risk, capacity, and price. So welcome to the webinar.
All right. Thanks, Lisa. And hi, everyone. Stephanie Siebold. I am the president of Alternative Markets and chief underwriting officer for specialty casualty at the Hanover. I've been here 18 years. I've been in the industry for 25, started out my career at the agency side. I think I bring some value to this conference. I am all lines of business trained for the P&C lines and non-admitted and admitted.
Welcome. You bring a lot of value. Thank you so much for being here today. All right, Linton, over to you next for a quick introduction.
Yeah, so hello, everyone. B. Puckett with Gallagher, and I manage market relations for Gallagher across the U.S. and been in a lot of different roles across my career, which, gosh, I guess that's probably over 25 years now for sure. But look, in my role, I think what I bring to this conversation is I'm able to see and kind of share a really good perspective on what drives a successful partnership between our carriers and our brokers, and look forward to sharing some of that perspective with everyone today.
Welcome to the webinar. Gunter, you next.
Yeah, well, thank you for having me on this webinar. My name is Gunter Kreisman. I'm the Chief Underwriting Officer for Markel across all of our U.S. and Bermuda platforms. I've spent my career in many different aspects, all on the underwriting side. I actually started as an engineer and then moved into underwriting. So I've had a lot of engagement with brokers and dealing with a lot of topics that we're going to be discussing today. And then now in my role, looking after all of our product lines and dealing with a lot of the macro factors that really can impact appetite and how we think about appetite. I'm certainly looking forward to sharing some of those perspectives and certainly joining everybody here and getting a little bit deeper into the conversation.
Well, thank you. Next up, Tom, if you don't mind introducing yourself.
Well, thank you, and thank you for having me involved in this. My name is Tom Ricketts. I'm the cyber practice leader for the professional services practice.
Can you hear me, Tom?
Yes, I can. Can you hear me? Is my audio blown? Hello?
I could hear you, Tom.
Okay, all good. So, yeah, I'm the cyber practice leader for the professional services practice. We look after a lot of law firms, consulting firms, and other types of professional services firms. I've been in the industry way too long. I actually remember the first hard market that led to the creation of companies like Ace and Excel, which was a long time ago. So really the perspective I bring to this is with my work over the last 10 years with one of the more challenged sectors in terms of cyber risk, particularly when we went through the hard market back in 2020, 2021. Hey, Lisa, I can't hear you.
Okay. Can you hear me? Ah. Okay. Now, can you hear me?
Yes.
Yes.
Okay.
You're back.
You know what? I jinxed myself to everybody listening because I told everyone what to do if you have a technology issue, just hang up and come back in. Okay. So sorry about that, Tom. I was like having technical difficulties right when you were talking. I know you
No
introduced
problem.
yourself. So we're going to get going right into the first theme today for all of us to cover. Let's talk about, and Tom, I'm going to kick it off to you. Really curious, like, what happens when, appetite goes opaque? When the front line feels a fallout. So let's focus on cyber. Went off the rails in 2020, and brokers like you had to juggle, conflicting forms, difficult expectations, silence where maybe you needed clarity. What happens actually on the ground when appetite's changing almost immediately without warning or with very little predictive signal?
Yeah, well, look, I know in simple terms, we got very busy because in our role as the intermediary and working with, as I mentioned, one of the more challenged sectors that was experiencing not just frequency of events, but also severity, we really did run into some significant challenges in terms of working with our markets to obtain capacity for our insureds. A lot of our insureds didn't just have pricing issues, they had availability issues. And so we had something of a mountain to climb. As you mentioned, one of our one of the aspects of our business was both kind of an advantage and a disadvantage, in that there were actually relatively few markets that really had appetite for working with professional services at the time. So we had fewer markets to deal with, but then we had the issues of figuring out, what is your appetite? Do you have limitations in terms of sector, in terms of capacity, in terms of the size of entity that you are willing to work with? And then, of course, you get into the controls and the application process. So it was really one of those issues where the insurance market tradition of communication was the only way to go. We were just constantly on the phone with our markets, trying to figure out what their appetite was, what information they needed, how to satisfy that information, and of course, obtaining that from our insureds. Now, one of the outcomes of that, I think, has actually been one of the great innovations that has made our lives here at Aon easier, because obviously at the time, insurers suddenly started imposing these communication requirements in terms of applications, ransomware supplements, and everybody wanted their own version. So our clients were getting a bit fractious about constantly being asked to fill out another form that was basically asking all the same questions over again. It turned out that we had our own, what we call our PsyQ platform, which was used for cyber maturity evaluation, but we adapted that to become the application process. And we've been working with that ever since then. And it's proven to be a great platform to essentially solve for that evaluation of the client's controls. So that then leaves us just with the issues of, okay, appetite. Are you interested in law firms, or maybe only consulting firms, or maybe only accounting firms, or firms above 500 million of revenue? So it becomes a complex matrix. And then, of course, we have to get into the coverage issues. Who's prepared to give the coverage that suits our client base? And there's a lot of to and fro, but given that we have to make the most of the premium base that we have now developed, a small cadre of insurers that we have great partnerships with. And I think we've now gotten over those communication problems for now, but of course we've been in a soft market for a few years. So it remains to be seen whether that will hold if the market, or maybe even when the market takes a turn.
Yeah, and I'm curious, Stephanie and Linton and Günther, like, how do you handle? So clearly, it was, from Tom's perspective, not only building those relationships, but also establishing that kind of like, how do we take some of the redundancy out? How do we have all that data gathered and aggregated? Not to get systemsies, but like, how do we have a point where we can start aggregating and giving carriers what they need without having all of these disparate forms when things are changing quickly? I'm curious, maybe Stephanie, over to you, just quickly, first, and I'll go to Linton and then Günther. How do you all see similarities in some of the experience that Tom highlighted?
Well, there's definitely a lot of similarities in our E&S business. I think every carrier has their own supplemental app, so very similar to what Tom is talking about. I think you need to really focus in on what you need to have versus what's nice to have, right? And so we do end up accepting multiple different applications as long as the core items that we need are answered within those. I think also we need to think about it from the underwriter's perspective. If we don't line up that appetite with what the underwriters are kind of targeting, we end up running the risk of our underwriters burning out a little bit too, because they're having to have those conversations around education and the declination. So it's very, very important, as Tom was mentioning, like that communication back with the broker and the company to make sure that you stay in lockstep.
Linton, next over to you on that.
Yeah, I mean, I agree with a lot of what Tom said. I mean, certainly, I sympathize with the challenges that he had early on in the days of cyber, where supplemental applications. We fought that same pain, and we've been down the journey of trying to simplify and make that process certainly more efficient for us and our clients. And our carrier partners. But, I would say, look, there's a lot of work being done with respects to technology. We just had one of our, a large trading partner in yesterday, the CEO, and, they talked a lot about how they're now using AI to triage submissions. And I know we're going to talk a little bit about submissions when we move forward. But all the data points that now are required from an underwriting standpoint, our goal as brokers is to certainly try to make that as efficient and as easy as possible for our carriers. Submission flow for a lot of our carriers continues to go up. So, it's a challenge that they have. We've got to find ways to make it easy, find ways to make it efficient to trade. And, I think the more that we can do to leverage technology, leverage AI, build out more consistent, submission forms into the carriers, I think all of that is going to provide a lot of success for all of us in the partnership moving forward. So.
Yeah, and before we go into that next deeper theme on submission fatigue, Günther, I just want to see if you have anything to weigh in on the appetite signaling, and then I'm going to kind of cue you on the next big topic, which is submissions. How dare we not get to that?
Well, and just speaking specifically for appetite, I will say we're not out here to make our trading partners' life and our clients' life harder. We're in some cases grappling with some macro factors that we may have had no idea that it was going to necessarily impact a company or our individual company the way it did. And I cite, obviously, cyber was one example that Tom brought up, but I would just cite COVID, because I think that was a great example where there was both the direct and indirect impacts from COVID that really shifted many carriers' appetites. You had coverages that were impacted, like event cancellation is a great example, that you had to all of a sudden rehang your appetite. We had an event cancellation division and policy that we would offer, and that we had to do a full stop, and then we had to implement some additional questions around how you were organizing events. So that it's not to say that we're just here to make things different. Obviously, there's some macro factors that go into that. So that's one. And I think through that process, we were very clear in making sure we were communicating effectively with our trading partners to work through that process, because that's certainly, as we were grappling with it, many people were grappling with it both on a personal and professional level. And then the second one I would cite is just around the property market at the end of 2022, is you had roughly about an $80 billion deficit relative to the amount of supply that was coming into the property catastrophe market from a reinsurance perspective. So a lot of carriers, and this is kind of a known if you're using the Donald Rumsfeld quote, where you knew that the market was struggling. Some carriers were proactive, some carriers were not as proactive, and what ended up happening is many carriers had to reduce appetite pretty significantly after the 1/1 treaty renewals, and in some cases, we heard of instances where carriers had just completely stopped quoting new business because just of a complete change in the availability of capacity in the marketplace from a reinsurance perspective. So that had some ripple-on effects. You had brokers that couldn't get placements done. You had challenges with just carriers just being able to even define what the risk appetite is. At Markel, we had prepared for that, so we were still trading through that process. But that's just something where it's not just all about maybe an individual product or the submission that's coming in. There are wholesale changes that happen in appetite, and some of which are known and some of which are just the macro factors that play into that.
Yeah, so let's take that. And I spent like a decade on the reinsurance side, so clearly, and then I was doing so much during the COVID. So you're bringing back a lot of post-traumatic stress for me right now. but like, as we think about this systemically, I'm always shocked by people, like when I explain like my journey, and I'm like, I used to sit at the back end at the reinsurance side, and then I kind of like went to the carrier, and then I went like more front end into the distribution side in my own journey. And I'll say things about like how much data that's submitted might be replaced, not used, et cetera. Because we spend a lot of time in the big data sides of this figuring out like, well, what do we really need versus maybe what are we receiving versus maybe what's reliable versus maybe what do we want to, like, I think of it as my audit days, like independently source or independently verify. And, I talk to people at the front end now a lot about it, and they're like, are you kidding me? And so there's this whole concept of submission fatigue versus risk intelligence. With that concept of data and risk intelligence becoming more and more robust with our systems and how we can actually process and stream data much more real time, what actually moves an underwriting decision, and how do we actually know what pertinent information to provide? Or are we just still providing, like what they're asking for, even though we know it may or may not be used? Like, how do you frame that up, Gunter? And how do you think that really affects, I'll call it, just this overall fatigue on the front end?
Well, I think it's a big problem in the industry that many people are solving. So some people have actually gone quite far in trying to solve for that through, and I think Linton was mentioning the use of AI. We've done a lot relative to the use of AI at Markel. But if you look at just the amount of data that insurance companies are processing today, we're only using as an industry anywhere from 10 to 15% of the data that we're actually receiving, and then that's not even accounting for all the unstructured data that's sitting out there where you can leverage additional insights into that data. But a lot of the submission information that you get today, it really lacks standardization. So we see this on the reinsurance side, because Markel, we do have a reinsurance division. We see from different brokers on the same individual risk, we have different data. So you have inconsistencies with even the data that brokers are collecting on the front end, and a lot of that's just around standardization of what is ultimately being sent or what's being sent as part of that submission process. You have inefficiencies going back and forth, questions that are being asked on data that frankly could be pulled from third-party data sources or enriched through the use of AI. And I'll get into that a little bit more, but those are areas where we need to be moving. And I think there's a lot of movement afoot today in coming up with and pulling in data without having to rely on the traditional broker submission. I mean, when I first started as an underwriter, it was the submission that the broker sent. You'd look through that, you'd pan through some some sources on the internet and try and supplement some of that information, but then you had to go back and forth and ask a bunch of questions, some of which doesn't ever get consumed in the underwriting process. That's really more on the risk analysis side, and some of which actually goes into the core data elements that feed the individual risk appetite for an individual product. So that's where, and if you look at just the amount of data coming in today, the underwriters are spending so much time combing through all that submission data that our brokers send us, that they're spending less than 30% of their time on actually the risk analysis, which is what we're paying them to do, is to go through that individual risk analysis. And so that's a core shift, I think, for the industry right now, to start to digitize submissions. And we've been working at Markel to look at digitizing our appetite so that the data and the submission information is ultimately clearing through our own individual appetites, so that we can streamline a lot of that process and then leverage third-party sources to enhance and enrich our data, so that we're not having to go back and forth to the brokers, because that's another key aspect where you get inefficient communication back and forth with the brokers. Let's pull that data on our own and then supplement that into our underwriting processes. And we actually did this in our international division. We partnered with a third party to enrich, enhance our data, and actually avoid a lot of that rekeying of data. And we saw productivity go up about 113% in our international division. So those are all things that are already in flight, and both at Markel and I know more broadly in the industry with our trading partners. There's a lot of work to standardize the format of the data, streamline that submission process so that it's more digitized, and then appetites being digitized by insurance companies, because that's how we're going to then cut through all this inefficiency that's ultimately occurring in the marketplace. And then you asked the question about what specific data points move the needle. I mean, that's going to vary by product line and by what's ultimately driving individual risk appetite. So if you're looking at excess casualty as an example, if I'm looking at auto liability, we're looking at the fleet size, we're looking at the miles driven, the radius that's ultimately being driven, there's safety records, so telematics, all that goes into play on an individual product that we may be looking at. But that's going to be completely different from some of those core data elements that we may want to collect on our property insurance submissions that we're collecting today. And once again, a lot of that can be filtered in, but then some of that has to ultimately be provided through our broker partners.
Yeah, no, I deeply appreciate that. I would love to hear just briefly, like, Stephanie, Linton, and Tom, on your perspective on just that, again, that fatigue. We're collecting a lot of data. We're also augmenting a lot of data, but we're still kind of doing the old things still while we're doing some of the new, like, data collections and data enrichments. Are you seeing fatigue? Are you seeing improvement on that? And again, Stephanie, I'll start with you on this one, just to weigh in on what Gunter said.
Sure. Gunter really hit the nail on the head in terms of how we're trying to transform with AI, trying to transform with some of the third-party data. But you also have underwriters that have been doing this for quite a long time and want to trust but validate with their own feedback. I think the AI triage is going to be a huge game changer for our industry and for the companies to be able to bring some of that third-party data, but then also rank the accounts, right? To be able to say, this has all of the data elements that I need to underwrite this account, versus this one where I need to get 20 more data points on it. I think something that I would love to see from each of the agents and brokers that we talk to is, when we get loss runs, we just get loss runs. And I think it's really important to hear the story behind the loss runs in terms of why did the loss occur? What are they doing to mitigate this in future events? That's not irrelevant, right? We need that in order to understand how we're going to price an account. And so the more that we can get from our agents and brokers from that perspective is enormous for us.
Yeah, I think that's super important. Linton, your thoughts on that?
Yeah, I mean, look, I think, a lot of discussion on all the different data points. I think everyone's getting an appreciation. And certainly I'm not on the underwriting side of the challenge with taking in all those data points and doing the analysis and putting out quotes. I think as our job as brokers, certainly we've got to focus on submission quality. We have to keep that consistent and make it easy for our underwriters to ingest that data and be able to work off that basis. But for me, I always, when I was out broking deals, for me, it was always kind of, going back to the commenter on trust and relationships. I mean, I was always very conscious not to waste the underwriter's time, right? And I was always very clear, look, here's a submission, here are all the data points, you should have all of that, but here is where I need you to be, right? And trying to give them guidance and direction in addition to, all the different data points. I think that is such a critical piece. And I think that just goes back to relationships. It goes back to that trust and that partnership. And, when you don't have that between a broker and underwriter, that's where I fear, underwriters are losing some of that guidance and direction. And, some of the feedback I get across our organization is that, specifically in kind of the mid-market to smaller account space, the underwriter and broker relationships are becoming more transactional. That concerns me a bit. I'd like to see hopefully this AI and all the efficiency that we're all talking about, that's going to give us time back. Hopefully we take some of that time to get back out into the field, be more visible with each other and build relationships. And, I think that will certainly drive more success as we move forward as well.
I love that. Okay, I like the re-emphasis on the actual being in person and with each other in the field. Love that. Tom, what are your thoughts on that?
Yeah, I really couldn't agree more with Linton as to the issues. And actually, Gunter brought up a really good point that the way I see it, there is no shortage of data. What there is a shortage of is actionable intelligence based on this fire hose of data that we're all dealing with. And AI obviously has a role to play in providing us or providing insurers with the ability to analyze the data that they're being provided with. But I think we all need to be moving towards efficiency, making sure that we're not just asking for data for the sake of asking for data because it's available, because, there is no end of data available. What we need is the intelligence, the information that actually moves the dial. And as Linton says, a lot of that is actually based in conversation. And I think, Gunter, you mentioned this issue of, there is data that you can go out and collect for yourselves. One of the biggest challenges that I have in placing cyber is that very often I find insurers are using third-party services to go and collect information about our insureds. And we then run into a firestorm of questions and deep analysis required on, why doesn't this client have this control or that control? And it turns out that the information is actually wrong, that it's been collected through a third-party service using data that is wildly out of date and has nothing to do with my client at all. So we're actually ending up spending more time answering questions that have nothing to do with our client's risk, which, is an example of where these data systems and data collections can actually lead you down the wrong path. And so I think there's a balance to be struck between, everything that Linton was saying, which I totally agree with, and everything that Gunter and Stephanie were saying, which I also agree with. And I think it comes back to this fact that the human relationship, that the conversation is really important, that you cannot do this by AI alone. And I say that speaking from Aon, who have spent $1 billion on AI and data and analytics, because they are really important. But the important thing is to use all of that power to simplify, not to make things more complicated.
Yeah, I love that. And I won't go too deep into it, but I think there's there's a concept at a high level of data exchange that we could not do in a previous technical world, that because we didn't know where the business was going to get placed. It's like, well, the carriers and the reinsurers are like, oh, like we're going to go get our data because we're going to use it for things placed on our books, right? And the brokers were like, well, but we have the source, but we may, because we're independent, we may like not, like we're going to give you that data, but you may not be giving your data back to us. So I think, like, in addition to the submission fatigue and the risk and the intelligence, there is a concept of intelligent data exchange between an independent party and a party paying for data. I always say, like, would you give somebody your car if they were taking somebody else out on a date? No. But you would give them your car if they were doing something for you. Like, I need you to take my child somewhere. Can you do that? And so I think we're also getting into that era, and I've started exploring that. Probably not for the topic of this webinar, but I think there's another layer to this here, which allows us to share data in a way that's mutually beneficial and known. And to your point, Tom, it's like, so that you're not chasing the wrong data, and how that data supports in bi-directionally. But Stephanie, I want to kind of kick it over to you, because we're talking about data, but I want to talk about precision. So, like, a lot of people might think that precision could be pigeonholing, but it can actually be partnership. So why is clarity around appetite maybe still seen as taboo? What does real partnership look like in practice? How do you feel it, right? Like, how do you really genuinely understand partnership?
Let's see. Okay, my phone's not on mute. Perfect.
Oh, no. Are you still there? It's okay. I've done all the things this webinar.
So, Lisa, I don't know if I would call it taboo when we talk about clarity around the appetite 100% of the time.
Okay.
One carrier can't be everything to everyone, right? And appetite knowledge will help our brokers understand what type of business we prefer. There are times that there's regulatory changes that are occurring, and we start to see losses in a particular area. It requires us to really pivot quickly, but it doesn't exonerate us from having to communicate around any of these changes. When I talk to some of my underwriters, and especially new underwriters, I say, I have 3 customers. I have the insured, I have the broker, and then I have the other internal business units that I may be collaborating with. So by not articulating any of those changes, I'm really at risk of losing confidence from any of those 3 customers, or creating a mistrust on it. So the real partnership should be more of a collaboration when it makes sense. Our agents and our brokers have that frontline experience with the emerging trends. Tom's talking a lot about cyber, right? Cyber is not my area of expertise. I would lean on him for some of his expertise in the longevity in this space to really understand, okay, these are some of the emerging risks that are coming up. It could be a synergy between all of us. I think one area, and I'll just give one quick example, is there's an emergence of medical monitoring for insureds. So that insureds, they don't display a current bodily injury right now, but they could in the future based on a product use. And so with a large book of business that could be impacted, I think a broker runs a real risk of accounts being non-renewed if there's a lack of clarity around how this could potentially impact the future profitability of the industry. And it's really about working together to brainstorm how this should be viewed. What else could be at risk? What insureds could do to help prepare themselves for situations in this partnership? So I think that's really kind of, for me, is a big example of where we partner. Another example that I have, just thinking about the Nevada state bill that came out, I think it was the fall of 23 or maybe beginning of 24, and it impacted coverage for defense within limits. We had to quickly identify as a carrier which forms are impacted. Is this related to admitted or not admitted? Which lines of business are impacted? Are we okay with renewing coverage with defense outside the limits? There were a lot of pieces to that from a regulatory standpoint, and we had to partner with our agents and our brokers to understand how is that going to impact you, and what are some of the pivots that we're going to make. So clarity and appetite, clarity in what our vision was, super important, and I wouldn't consider that taboo at all, to be as transparent as we possibly can.
So I love that as well, by the way. and I love, like, I've been on the front lines so many times where there was this new emerging thing we were doing, and we were trying to figure out how to handle it. And to your point, it really is partnership, because it's the multifaceted lens of the economics, of the capacity, of the impact, and all those things coming together, very much in real time. While we are an industry of conservatism, we also have to think about all the scenarios, which fortunately we're really good at modeling, but we have to be able to impact those scenarios quickly. Gunther, I'd love to hear what your thoughts are on this quickly, as well, in terms of this partnership focus.
Well, I think Stephanie had an interesting comment on that Nevada State bill, because the same thing for us at Markel. You had to quickly evaluate how many policies you had exposed to that, what that impact was going to be on your product, and then is that going to be within risk appetite going forward. So there's another example, and going back to what I mentioned earlier, where you could have a macro event or an event outside of your control on what you were targeting for your product that directly affects your appetite. But I do think with appetite, because this I believe is as old as time, in that there's always questions around what is your appetite, and there's always views that, well, what do you specifically want to write? And as a carrier, we're trying to provide as refined of a detail for our risk appetite, be specific as to what we want to ultimately write. But there is always a fear that if you get too narrow, that you could have only those submissions that are being sent to you in a particular industry class be all that a broker sends to you, when in fact you may want more than what is just in a particular line of business. So you take habitational as an example. If we were to say we're going to write all of the habitational business in primary casualty, or we're going to look to primary casualty habitational business, we would get a flood of submissions in immediately, and we may get known for just being that habitational player in the casualty space within wholesale. And the challenge with that is if we had done that, then ultimately that would take us away from other product lines that we ultimately want to write. So you got to be very careful with how you narrate that. The other risk you run is if you're too broad, you tend to get too many submissions coming in. You can't get to all those submissions, and then you create broker frustrations where you just have all these submissions that are coming in, some of which are not even touched. And when I look at the amount of submission volume we see today, it's impossible in some cases to get to every single piece of business that's being sent in. So there's a fine balance between being very specific, but not being too broad in what your ultimate appetite is relative to each of your individual products you're distributing.
I really do love that perspective as well. And Gunther, I'm going to ask you before we go to our next section, like what do you think about that? Because then I want to kind of pivot, Linton. We're going to go into the next section on this.
Did you say me again, Lisa?
Oh, no, sorry. I was trying to say Tom. I'm sorry,
yeah.
my brain.
Tom,
I was trying to say Tom. You can go again.
Yeah, I don't mind to continue to talk.
No. I meant Tom. I'm sorry.
Oh, Tom, you're on mute.
There we go. Thank you. So I'd just like to say, from a broker perspective, when I look back over my involvement with some of the more difficult underwriting areas like crime, like professional liability, like cyber, what is taboo for us is not appetite. It's communication of appetite. It's change of appetite. It's when an insurer suddenly says, yesterday we were writing that, today we're not, or we're actually, leaving that line of business altogether. That is when chaos ensues. That's what makes our lives and our clients' lives difficult, because our clients are looking at an availability problem and a pricing problem, both of which are extremely sensitive. And our job is then to go out and try to find replacement capacity. So the other thing is, a change of appetite in a favorable direction can be not as problematic, but can present its challenges, because you have to look at things like, is this actually sustainable? What lies behind this sudden desire to get into this new line of business or offer capacity at way below market rates? Is this naive capacity? Is this a market share grab? What's behind it? Is it sustainable? Is it actually good for our clients? So the changes in appetite tend to drive more chaos than saying, okay, this is our appetite, it's within these narrow bounds. Okay, great, we can understand that and work with it. I think your point, though, about communicating that clearly so that brokers don't get the wrong idea that sort of, oh, you're only interested in this type of client, whatever it might be, and we only have 4 of those. So we'll show you those 4 and nothing else. And that may not fit what the actual appetite is. Goes back to the what we've been saying all along about communication and clarity. But yeah, like I say, I think the biggest challenges are when appetite changes. And that might be driven by external forces like the Nevada ruling, which I think it came out, was changed, now has been codified. So I think we're going to establish some clarity there. But still, obviously, it's going to change insurers' appetite for Nevada-based risks.
Which I think is a great segue. Okay, Linton. So now you're up to bat for the fourth, for the real,
All right.
yeah. So I'm ready for you now. So which is a great segue into maintaining trust. So how can we maintain and enhance trust with carriers as the market evolves, ensuring that brokers can effectively adapt to changing appetites? So thank you, Tom, for cueing us right on that, for change in appetites with periodic insights.
Yeah, and I think we've all touched on this a little bit over the course of the last 45 minutes. But look, trust is it sounds really simple, but in reality, it can be tough, right? And it does require a lot of work and collaboration on both sides. From a broker's perspective, when carriers change appetite, and Tom covered this, right? On one side, it can create opportunity, right? It can bring in new capacity, new product, enhanced coverage. And look, that's a good thing for us. It's a good thing for our clients. I agree with Tom. There's a lot of work we have to do to trust when that new capacity and that expansion comes in. But on the other hand, and I think a lot of what we've touched on is when carriers restrict appetite, right? That's where it creates challenge. And I love Tom's word, it creates chaos, right? And I would say, the last 5 years, it's probably been more of the latter across our business. I think with the hard market, and I think everyone understands kind of what our carriers had to face from a loss trend standpoint. It's been tough on everyone, right? But in the early days of that hard market, I would tell you, I think that communication that was coming in from the carriers, it was choppy, right? Appetites were changing so fast. We had a lot of our carrier partners that were exiting class of business. They were reducing the limits that they were putting out on any specific deal. We had terms of coverage that were changing. And again, I think as brokers, we knew what was driving this. The challenge, again, especially in those early days, was that a lot of that communication was coming in last minute. So, as a broker, we then have to turn around and deliver that news to our clients. And back in those days, our clients didn't have that plan. They didn't have that budgeted. So it created a lot of stress. Now, I would tell you, I think over the last several years and coming through that hard market, I think we've learned a lot, and I think the industry is in a much better position now. I look at the communications that are happening across our fields, not only nationally as far as how the carriers are communicating to me, but also kind of how that's cascading down around appetite down to our field from the underwriters down to the brokers, and I think that's improved drastically since what we saw kind of back in 2018 and 2019. Now, certainly another thing that's helped is we are seeing the market stabilize. I think a lot of that remediation that the carriers went through, over the last several years, I think for the most part that's behind us. So that will be good, and it's good to see that. I think our carriers have their books and financials in a better spot, and that's going to be good for policyholders. But look, we all know, I think that, look, this market can turn on a dime, right? Just based on kind of what we're seeing from a trend standpoint. So, I think we all, while we're starting to see the market kind of calm a bit, I do think we always have to keep those tactics in front of us. And we talked a lot about transparency. It's being upfront when changes are coming. It's all about communication. I think that is probably the most paramount piece to this. And I kind of going back to those early days, look, no one likes to deliver bad news. I think we all get that, but it is part of our business at times. And as brokers, look, we understand that. But look, trust builds when a carrier gives us time to react, gives us time to work through the change with our clients, and gives us time to kind of build a plan of action. And look, it's balance, right? As brokers, look, we have to advocate for our clients. Carriers, you have to manage the risk. You've got to stay disciplined in that process. I think we all understand that, but I think transparency, I think communication, and doing that early, that's what drives a successful partnership. And I think that's what can create, win-win on both sides as we move forward. Oh, Lisa.
Can't hear you, Lisa.
Stephanie, I was going to ask you if you'd like to weigh in on your lens, if there's anything you'd like to add to that.
Sure. Not much I can add because I think B covered a lot of the topics. And, I found myself knocking on wood a little bit when he said that things were kind of slowing down a little bit in terms of the market. I really hope so, because we've been through a lot of change. From a carrier perspective, I also remind folks too, on the broker side, our frontline underwriters are going through the same exact thing that you're going through, right? They're not receiving everything kind of firsthand. They're getting told, okay, we have to go in this direction, right? And so for me and for my role, it's about communicating early, communicating often, and making sure they understand the why, because then that message needs to be delivered out externally. And it's so important that you have the underwriter buy-in and they understand the direction that you're moving in order for all of us to kind of move in that same direction. I know we've had several different initiatives before where we kind of said to our broker, kind of pick your poison, right? Do we want to do this or do we want to do that? Like, what would be less impactful? Both of them kind of get us to the same spot and really have it be a little bit more of a collaboration versus this is our one way and this is how we're doing it. But I would just remind folks on the phone that underwriters do get the same information that you're getting, maybe a week ahead of time, 2 weeks ahead of time, but it is a change for all of us usually.
Gunter, for real this time. Is there anything you'd like to weigh in on that before we move to the Q&A part?
Well, I think Stephanie and Lynn touched on a bunch of different concepts around communication. Obviously, the market's gone through a ton of change. I still think there's change to come, given a lot of dislocation you see in certain lines of business. I mean, some are on the upswing, some are still in an area where it's a watchful eye. But the one area I would add here is just when appetites do change, I think it's important to build in any sort of buffer period for when you're implementing a change. And so we've had changes at Markel where we were instituting some changes in some portfolios in 2024, and getting out in front of that, communicating that to our trading partners, and then ultimately providing some grace period, if you will, or buffer period to then implement those changes, just so that there's enough of a leeway to then action whatever needs to be done, because we understand on the other side with our trading partners, they're in a very tough position. They're having to tell clients that there's big changes that are happening. They're having to, in some cases, change the carrier or change terms and conditions, and we want to provide enough leeway to make those changes so that we don't put our trading partners in a tough spot. So I think that's key, is just making sure that there's enough from a buffer period perspective when you do make those changes.
Yeah. So let's go. So first of all, thank you, audience. Continue to send your questions in if there's anything you'd like to know. We're gonna switch into the FAQ part just to make sure we have enough time. And I'm gonna open this one up. Tom, I might pick on you to open this one up first. But I know we talked about especially the Nevada regulation a lot. So clearly all of you all can weigh in on this one. But state regulatory agencies are requiring more data from carriers for reporting, as well as typically known by brokers, but not necessarily as accurate or known during submission. Curious if anyone is looking at it from that angle. And maybe Tom, I'll start with you first.
Okay, thank you. I'm actually not necessarily convinced that I know what the questioner is getting at here. Um, I think what I would fall back to is the not typically known or known by brokers or not as accurate or known during submission. I mean, we don't know what we don't know. Obviously, regulatory reporting is an important issue for everybody. Um, but I think, that's going to be something where we have to take our lead, take our guidance from the markets who, are actually having to undertake that. I think the good news is, of course, the data is becoming more available. AI is becoming more useful in doing the analysis on that data. So, again, it all comes back to communication, knowing what's needed in what format so that we can actually help with the delivery of that.
And
Yeah,
Stephanie, oh, go ahead. Go ahead.
no, I was just going to add on that because I don't think it's an answer in the question that was posed here. I don't think it's a function of not having the data. I think it's a function of pulling together the data in the format that the regulators want. And an example I would give you is in Florida, we along with the rest of the industry had received requests in 2025 around where wind coverage was excluded in either commercial or residential policies in specific zip codes. And so you have to know what policies are excluding what locations in what zip codes. And so it's less about do we have the data, and it's more of aggregating all that data together. And that's more, I think, I mean, honestly, the challenge is aggregating all that than it is necessarily we don't have access to that data, because a lot of that is pulled in through the underwriting systems, and we have to respond to various state regulator requests when they do ultimately come up. But that would just be one example. And like I said, it's more about aggregating the data than it is necessarily the data that we're trying to pull together.
Linton, did you want to weigh in on that? I saw you kind of popping in.
Yeah, I mean, look, I think this is probably a question that's more more directed to Stephanie and Guntar, but so I maybe Stephanie, I'd probably let Stephanie take this over
Okay.
me, but
Yeah, I was rereading the question because usually a data call only involves the policies that you write. So it wouldn't include just your submission. So ideally, and to Gunter's point on the Florida X Wind, we're able to go in there and scrape all the data of the policies that we write. We're able to put it in the format that they need. It takes a lot of massaging of the data to get it into the right format. And some of us struggle with multiple different systems that we're using to do our quote bind issue. We end up getting there at the end, but usually it's a little bit of a fire drill. But it's not something that we would need during submission. It's something that's actually put into our policy system that we're pulling out and looking at.
Well, we've got another one coming in. So thank you all for that. The next one is, what is the preferred method of learning about carriers' appetites? Do you prefer carrier appetite tools? Does your preference change depending on different, scenarios, different line of business, etc.? And maybe I'll start with anybody want to volunteer for that one, or
Sure.
Yeah, I could just
Oh,
go ahead, Tom.
go ahead, Gunther.
Yeah, so I would say the traditional method has really just been around individual cut sheets that are provided around individual products, where I think, and I mentioned this at the very beginning, where we're looking to move towards is to digitize those appetites so that as submissions are sent in, that's screening, but you still need a high level overview as to what is really within an individual carrier's appetite. And that's where I think cut sheets, having clear engagement with, and I think as we get to this point where AI is looking to enhance the underwriting, not replace the underwriting. And what Linton mentioned earlier, getting out with the underwriters, with our broker partners, that's going to help to reinforce those appetite areas. But I think it's cut sheets, engaging with the underwriters, and then ultimately digitizing the appetite to then streamline that process.
yeah, and Tom?
Yeah, and I think this is one of those things where there is going to be a bit of differentiation depending on the sector, the line of business, and the broker involved. And certainly when I look at our approach to broking and marketing business and the move to digital platforms, having digital appetite built into that is going to be invaluable, because that's going to save brokers submitting clients to insurers that aren't interested. So I think there is kind of that mass market efficiency to be derived there. But when I look at some of the more again, going back to the challenges of the complex environment that we're in due to the specific sector that I work in and the line of business, it's very much a personal relationship thing, because appetite is very rarely 100% fixed. And so we get involved in a lot of individual discussions where we might want to understand an insurer's appetite in general, but that appetite is very rarely cut and dried. It's not binary, it fits or it doesn't. So there is, I think, still going to be a role for that communication and the need for flexibility from insurers, because ultimately, we're all seeking efficiency. We're all trying to make this transaction as efficient as possible. And therefore, as brokers and insurers, we're in this weird relationship of cooperation and sometimes adversarialism. But at the end of the day, we are serving the client, and we need to look to what the client needs, which tends to be more around stability, predictability, and ultimately coverage at a reasonable price. So we can't let the business needs of ourselves or our desires or our platforms get away from what the client actually needs and is willing to buy. I think it's just something we always need to keep in mind.
It's super important. And as we kind of like frame this for I always call it like our call to action moment. So as we start to kind of position this, like I could sit on this webinar and talk to you all forever. But as we start to wrap this up, and Linton, I'm going to start with you, and you can all start to think about it. But, I always like to think about what's one thing you would like people to start doing, stop doing, or continue to do. Like with all the things we know, if we could better align brokers and underwriters, to kind of solve for, what's the one thing that you would ask anyone to start doing, stop doing, or continue to do? And Linton, I'll turn it over to you first. We've got about a 3-minute wind down. So yeah, we'd love to hear your call to action.
Yeah, so my comment kind of follows what I said earlier. I do think that, there's been, just a little bit lost when it comes to personal relationships. And I love what Tom just said a minute ago. I think if you're a broker and you're not, or a carrier, and you're not out there building those personal relationships, I think you're going to get very much a black box response, right, from the carrier when you submit that business in. I think it's those relationships that allow for flexibility, allow for negotiation, and I just think that we've got to do a better job on that front. I think COVID kind of pushed us back in our houses, and I see carriers, it's not as consistent as I would like to see. And I think everyone's busy, and there's a lot of demand on our time. I just think we've got to find ways to make sure that we're visible with each other, and that, we're keeping those relationships strong from a personal level as well.
Love that. Stephanie, over to you.
I don't think I could have said it better. I think it's the communication. I think it's meeting people where they're at. But I think it's making sure that you're building your brand with your underwriters, you're building your brand on the other side with your brokers, to really make sure that the communication is just open, transparent, and honest.
All right, Tom?
I would say, obviously, totally agree with everything Stephanie and Linton said, but I think my concern is letting AI take the helm. Instead of using it as a tool to assist with the decision-making process, abdicating to AI as the decision-making process. I want to, and it goes back to what was just said, want to maintain that human element.
So Gunter, bring us home
Yeah,
before it cuts
no,
us off.
I'll keep it really short. So I think that from my perspective, it's really improving the data signals back to the brokers as to what ultimately drives and moves the needle relative to individual submissions, the risk appetite of the carriers. And we start to get that right. That enables all the things that Linton, Stephanie, and Tom just mentioned about getting back in front of the clients and spending more time building those relationships.
Well, thank you all. My only thing would say to treat appetite as a live signal, not something that's static. So thank you all so much for your insights, for the camaraderie, for your discussion. We could do this all day, every day. And for those of you who want more of these exciting discussions in real life, getting back to all the points about taking time for those relationships, please try to join us at Connected Underwriting USA in Austin, Texas, September 29th and 30th. We look forward to seeing you there. Thank you to all of our panelists so much, and thank you to all the audience for your sustained continued engagement. Until next time.